pandemic, as you know, has created so many problems. One of the biggest problems that a lot of people are having right now has to do with finances. Amber Perry from Farmers Financial Solutions joining us again to help us get through all of this, because there are so many complications. But this specifically, we're going to be talking about pensions and 401ks. Good to have you here, Amber.
Thank you.
What are some of the complications that you have noticed when it comes to people's pensions and 401ks right now?
Well, over the years, the number of pension plans have significantly decreased, while the number of 401k plans have definitely started to become more than normal. So employees really need to check with their human resources department, and they need to find out what their options are. If you're thinking about coming up on retirement, if you're in the process of retiring, there's even a lot of companies right now that are choosing to do away with the pensions completely. So they're taking that option off the table, making it a lump sum type of situation. The question that employees really need to be concerned about right now and ask themselves is, if you're leaning towards choosing that pension retirement type of plan with the guaranteed lifetime income, you need to find out if they're going to allow you to have that option, or if they're going to make you take a lump sum. And if they do allow the pension, the question really is, with everything that's happened with COVID, is what is your company's financial situation? What's their long-term viability in being able to continue to pay you those pensions for lifetime? And could it be better to take the lump sum so that you're in control of your money?
And are you seeing any of those companies offer early retirement packages to their employees?
That's actually become a pretty big thing right now during this pandemic. There are corporations, and it seems like the trend is moving towards more to come from other type of companies, where they're offering to give people early retirement layoff packages, huge severance packages, because what they need to do is they need to minimize the headcount so that their company can sustain long-term viability. So if you find yourself in that situation, in most cases, they're not offering the pension. They're offering, the one-time lump sum, here's your 401k severance package, take it and go type of thing, so that they can keep the company in a good financial situation. So if there have been rumors around your workplace, it's something to check into, something to find out what your options are, and whether or not your pension, if you have one, is still going to be on the table for you.
So if I'm somebody who is worried about that, what should I do?
So, a tricky part about trying to make the decision on, should you receive your pension benefit, should you take it as a lump sum, people like the idea of guaranteed income for life. And that's the beauty of the pension for most people, is that rather than taking it as a lump sum and probably frivolously spending it, they could get those lifetime payments. So, the question is too, are they comfortable with the market? Right now, more than ever, that I hear from my clients is that they're concerned about the market. They're concerned about the money that they have in the market. If they were to take this lump sum instead of the pension, what are the options that the market wouldn't deplete their funds? So there are options out there where you can guarantee the principal amount that you invest to make sure that the money that you start with stays there. There are products out there that can help with inflation. And there are products out there that can give you a little bit of return, most likely on what the market has in store for us for the next 10, 15, 20 years. So you get a little bit of the best of all worlds. And the benefit to that would be that you actually own your retirement account, regardless of what the company does that you worked for. If they make it, if they don't, you now have control over your retirement account. You can guarantee the principal, and you can set it up to give you your own type of pension payments for life.
Now, what are some of the benefits what are some of the benefits when it comes to pension plans and our spouses?
So one of the biggest key things in most pension plans is that you can choose, when the primary employee passes away, that their spouse continues to receive that lifetime income. That's a huge key factor. So then the question becomes, if I take my own lump sum and I make my own pension out of it, can I still do the same thing? And the answer is yes. You can absolutely set it up to continue to have those payments go to your spouse. And the other benefit here is that when you have a pension through a company employer, is you can go to your spouse, but at that point, if you both pass away, the money's just gone. However, if you have the kind that you actually own, that money is yours. And so if you and your spouse don't end up using all the funds that are in there in this guaranteed lifetime income, and there's still monies available, you now have something to pass on to your heirs. And that's not an option with company-sponsored retirement plans, whereas it is an option with rolling that lump sum into something that you own and controlling your own pension.
There's so much to learn about this. There's a lot of fine print, and obviously things are changing, and we, try to anticipate everything possible. But as we have learned through this, it can change in a day. Amber, thank you so much for being with us.
Yeah, thank you. I appreciate it. Have a good rest of your day.
You too. And here is more good news. If you would like to get a free financial consultation, you can call Amber at 520-296-6532, or you can visit agents.farmers.com/A Perry.